So that's where I think I can provide value. Today I could talk about 20 different types of financing somebody can get now, and then the importance of building a corporate credit profile to being more fundable and the things they could do to be more fundable to then make it easier to get the capital now and in the future as well.
You're listening to Business Lunch with Roland Frasier. This is your seat at the table. Welcome to this bonus episode of Business Lunch. This is Darren Clark, the producer of the show. Roland has been sharing a series of live Zoom calls on his Facebook page, and we've been sharing some of this super helpful content on the show. So make sure you're all caught up on this week's episodes. With the coronavirus crisis, Roland is rolling up his sleeves and helping entrepreneurs. And today, we're sharing his conversation with business credit expert Ty Crandall. They talk about leveraging the new SBA loans, strategies to access crisis funding, and so much more. If you're enjoying the podcast, make sure you're subscribed and share the episode with your business leading friends. It will be entrepreneurs that help the world recover. So let's get stuck in.
Good. So I'm excited to do this call because we've got a call for War Room people where I'm going to go through a 4-part multi kind of response plan to how to take advantage of everything that is going on, how to survive and thrive and everything. One of the key steps is having the ability to access capital. And so there's tremendous opportunity right now to get capital for your business. Not only, if you need immediate cash to help with that, but also just going forward, there's $50 billion in SBA money that's come online and all kinds of other stuff. And it's really going to be critical to get in front of it and get yourself to the front of the line as soon as possible, because everybody's going to start marketing it. Everybody's going to start coming in. And the people who are acting decisively and quickly and are first movers on this are going to be in the best position to take advantage of it. So that's why I wanted to have Ty here. Ty, I think I saw you there. You're on, aren't you?
I am.
Okay,
Hello.
Great. So welcome. Ty, would you talk a little bit, would you kind of speak a little bit to what should people be doing right now to get access to more capital using all of the resources you've got? And would you also, before you do that, tell us a little bit about your background and kind of what you do?
Sure, absolutely. I kind of feel like a weatherman in a hurricane. I've spent literally the last 12 years preparing for this moment because I owned a mortgage company in 2008 when everything went down, and being a mortgage broker and a mortgage company owner when the mortgage crisis occurred, wrong place, wrong time. So I realized that there was a lot of financing out there that I could get, and there's also business credit as well. And as a result of that and not knowing it was available and being in financial services for 20 plus years, then I kind of made the leap of discovering what kind of financing was out there and making it basically available for small business owners. So for the last 2 weeks, I've been doing exactly what you're talking about, telling everybody the importance of getting in the front of the line when it comes to the $50 billion in SBA, talking about all the kind of financing that's available that's kind of recession proof that you can get right now, whether it comes to credit lines, loans, but at the same time, the market's tightening up as well. So that's where I think I can provide value. Today I could talk about 20 different types of financing somebody can get now, and then the importance of building a corporate credit profile to being more fundable and the things they could do to be more fundable to then make it easier to get the capital now and in the future as well.
What is available now? What's new and how hard is it to get, and how fast can we get some money for everybody that needs it?
So I think the biggest thing that everybody is hearing the most about is SBA, and SBA is $50 billion in funding. So what we're seeing right now is that there are states that are stepping up to provide individual capital for business owners affected in their states. Florida's an example, one of few, where in our state, you're able to get a $50,000 loan that's interest free. So we're actually compiling information on every state and which state these types of unique financing are available, but a lot of states haven't followed suit. So what most states are doing is they're applying to actually get the ability to be able to be considered for these SBA disaster relief loans. And to give you kind of an overview of how SBA's disaster relief program works is that you can get up to $2 million from SBA. The loan terms are 10, 20, 30 years. And that's really important because there's a lot of capital you can get right now. But what makes SBA so unique isn't the fact that their interest rates are low. It's the fact that their terms are very long. So when it comes to getting financing, we would much rather have longer terms than lower rates because that's what keeps payments low. So SBA offers 10-year, 20-year, and even 30-year terms with these disaster loans. Okay, and on top of that, they're offering interest rates at 2.75% if you're a nonprofit, 3.75% if you're a for-profit. So for
What are the-
example, go
What
ahead.
are the terms on those loans, Ty?
So those could be 10, 20, or 30 years. So somebody is able to get financing as long as 30 years and able to get rates as low as 3.75% if they're a for-profit company, or 2.75% if they're a nonprofit company, up to $2 million.
Is that a straight AM loan?
Yeah, it is. And and there's a couple other things that should be said as well. SBA is waiving all fees for the actual borrower, or waiving fees for the lender as well to make the money more affordable. Now, if you want to move quickly, then there's an SBA Express. And SBA Express is $350,000 and less. So kind of the sweet spot with these loans is to try to stay under $350,000. And if you're doing that, then you have a chance of reasonably getting a loan closed in 30 to 60 days. And you reasonably have a chance of getting, the 30-year term, the 3.75%. And you have a possibility of getting around collateral. When you get above 350, then you lose the SBA Express designation. It takes longer to get the money. And you also are going to need to provide collateral, whether it be commercial or business collateral or personal collateral, to compensate. So 350,000, fastest, easiest way to get in on this. 2.75, 3.75, whether you're profit, nonprofit, long terms. So to give you an idea, 30-year loan, 3.75%, 350,000, payment of about $1,600 a month.
Okay, that's really cool, and that's SBA and particularly the Express. And you mentioned, because I know that like there are other loans, they kind of secure it by all of the assets of the business. So what's the restrictiveness of this in terms of, is there no security, or how are they doing that?
Well, it kind of depends. The way that SBA works is that they're going to want your cash flow to be strong. They're going to want your credit to be strong, and they're going to want some kind of collateral, especially if it's over $350,000. If it's under $350,000 and the file is strong, the credit's good, the business financials look strong, there's a good possibility they may not require collateral. But if they see things on the business, and especially SBA looks at reports from LexisNexis. So a lot of lenders do. A lot of consumers or business owners don't know that this information is out there. So if they're looking at things that create, concern on your LexisNexis credit report, then what's going to happen is they may then require that you have collateral. But if you're staying under 350, you might be able to get away from having any collateral. But if you're over 350, you're going to need some kind of collateral. The most common kind of collateral with SBA is account receivables. Customers pay you, they pay you on terms. AR is the number one type of collateral that SBA is used for SBA loans, whether it be to get an SBA loan for an existing business or to buy a new business. That's the number one form of collateral, but they'll work with any kind of business collateral. They'll even look as far as personal collateral, stocks, bonds, IRAs, 401ks, even the equity in your home can serve.
And these are all personal guarantee type deals too for
SBA. There's definitely financing out there that's not personally guaranteed. But when we talk about personal guarantees, it's important to note that personal guarantees aren't required when your business can financially stand on its own, which means you establish a commercial credit report. If your business hasn't built business credit, if you haven't established, a deep commercial credit report for your business isn't going to stand on its own, and your chances of getting non-personal guaranteed funding is very slim to non-existent. So if anybody wants to get away from personal guarantees, that's where the importance of building business credit profile and scores becomes very important, because that's where you can really separate commercial and consumer credit. That's when your business can start standing on its own based on its commercial credit profiles and getting away from guarantees on credit. But it would take a lot of credit to be established to start getting away from guarantees on loans.
Okay, cool. And so I'm going to go straight to some questions folks have. So Gavin, Ty said, I'm here to provide guidance to the veteran small business industry. So for veterans that are owning businesses right now, is there anything that he would be able to share with them that would help them get credit? And we'll just run through. Thank you everybody for responding here.
So the SBA Express loan, and it also has other even additional fees that are waived for veterans, is the best way to go for veterans if they have the cash flow credit collateral. But there's a lot of other options out there as well. So even if somebody has average credit and consistent cash flow, then they may even want to go with what we call peer-to-peer lending. And Street Shares is a really good lender in that world, where what they focus on are veterans. So those are two really good places, whether you're going SBA, which is more stringent guidelines, or something that's a little bit more lenient dealing with peer-to-peer lending through a place like Street Shares that focuses on veterans. Are some great sources for vets right now.
Okay. And that's Street, STREET, share.com?
Yep. Street Shares.
Okay, cool. What are the different options? So let's talk SBA for quick, but let's also say, what are the other options like loans to a corporation, that kind of stuff?
Well, when we go back to Richard, SBA is probably the best for what he's asking about. When it comes to acquiring companies, SBA is great with that because they'll use the assets that business actually has as collateral, and you're able to get in with a pretty low amount of money down. You can even obtain other financing to account for the 10, 20% that you may be down on the SBA loan, then use the assets of the business as collateral to qualify for the SBA loan to buy that purchase. So Richard, if that helps you. When it comes to service-based businesses or any other type of businesses, I kind of look at this and find the simplest way to explain and understand this is through 3 C's. When it comes to getting money, it comes down to cash flow, credit, and or collateral. So when we look at an SBA loan, for example, you need to have good personal credit. You need to have collateral, and you need to have consistent cash flow as represented by business tax returns. But nowadays, and ever since the 2008 crash, what we find is that there's a lot of alternative lenders. As a matter of fact, alternative lenders now account for over 90% of funding that takes place. It's no longer these SBA loans that come from the big banks. And these alternative lenders are looking at one of those C's as a strength. So if anybody wants to know the kind of capital they can get, then you've really got to focus on where is your strength. Is it your cash flow? Meaning, do you have consistent cash flow? Are you managing bank accounts responsibly? Can you show that on tax returns? So your tax returns show that the business is growing and that revenue and profits are growing year after year. Answers to yes to any of those questions will open up different types of cash flow financing. Some are very quick. 48 hours, you can get money. You can get up to $500,000. But if you also come in, you have good tax returns that reflect that you're actually growing in the business as well, and you have credit that's even average, then that opens up money from private investors to alternative lenders that will then give you longer term loans. So again, the difference is what term loan you get. The fast money, 24, 48 hours up to $500,000, that's going to be 3-year type loans. So if you do the math, those payments can be very, very, very high over 3 years. If you come in and have average credit, 650 or higher, and you have cash flow, then you can start getting into longer terms, 5-year or 10-year term loans from alternative lenders. The second C is collateral. So if you have that as your strength, then you can get all kind of financing based on that. That's low interest, credit doesn't matter, cash flow doesn't matter. So almost anything that's an asset can really work as collateral. It could be stocks, bonds, 401ks, IRAs on the personal side. Could be commercial real estate. Could be private or residential real estate. It could be vehicles. It could be account receivables or purchase orders. It might be inventory or equipment. So whatever asset that you have that could serve as collateral, if you have that collateral, you don't need the other 2 C's. You don't need cash flow. You don't need credit. And then, of course, the third C is credit. And based on credit alone, you can get, for example, there's a great program where you can get $150,000 in 0% credit lines that go for 0% for 6 to 18 months. They're no doc, which means your cash flow doesn't matter, your collateral doesn't matter. And with 650 credit scores or higher, you can qualify for that. So I always say start there. If you have average or better credit, then start with the credit scenario because credit lines are great to have. You can use them whenever you need them. And based on credit, you can get $150,000 or more of credit lines based on that factor alone. But based on whatever industry you're in, service or not, it's really look at your strength. Is it cash flow, credit, and or collateral? That opens up funding options. The more of those C's you get, the more kind of funding and better funding you get, all the way to having all 3 of them where you can get SBA loans.
Very cool. So just generally, Carlos says, I need money, I need capital for marketing and advertising. Does that change anything
it doesn't.
in your mind?
The need for the money really doesn't matter unless you're talking about SBA loans, and now it does. So it used to be, with SBA loans, you have to really account for what you're using the money for, and the money has to fit things that they'll let you have the money for. For example, like getting money to cover your payroll is not something that normally would qualify you for an SBA loan, but that's what these disaster loans are for. These disaster loans through SBA are specifically for your business reducing revenue, reducing cash flow, expenses going up. So these disaster relief loans will actually allow you to get SBA loans for purposes you typically could not have got them for in the past. But when it comes to alternative lenders outside of SBA, the use of funds really isn't that important. It's not like you have to account for where you're spending the money, how much you're spending on each thing. So whether you're a service business and you're just using it to survive, or whether you're using it to actually do more marketing and grow, it really doesn't matter, especially if you're dealing in the alternative lending space.
Okay, that's awesome. So we also have a question from Richard who says, can you help with loans for restaurant and hotel owner clients who are having revenue issues due to the virus?
Sure, we can. And the government's really stepping up in those few sectors as well. So we're really starting to see, especially in hotels and in airlines, that the government's going to be doing some special things. As a matter of fact, as crazy as it may sound, the government just stepped up and Trump said today that he's very open to the idea of even taking equity stakes in these kind of companies. So it's going to be interesting to see what's going to happen there. Can you imagine having the U.S. government on your board, Roland? That would be interesting.
That sounds awful to me.
But they are really hinting towards special things that they're going to be doing for those sectors most hit, which really have to do with the travel sections, the hotels, the airlines, especially amongst the two. So we're going to see in the days to come very special relief packages that will come for those hit in those industries. Outside of that, SBA is probably one of the best places to go because a lot of the financing that's typically for those industries is looking at the cash flow. And once cash flow ceases or is reduced, it's much harder to qualify. So you really got to focus on an SBA or a disaster type program, whether it's SBA or one that's unique to your state, because those will take into account the fact that they're anticipating that your revenue be declining. But one more point, it's also why you have to take action quick. You know, there's a lot of states, restaurants aren't shut down and you can still get that capital from all these sources. But the minute the revenue starts to decline or stops, it just dramatically reduces the amount of capital sources you have that can help.
Nice. Ty, let's see. Good time to refinance business credit card debt? ? If so, best options.
Sure, it definitely is. If there really is such a thing as a refinancing of credit card debt, I mean, in a lot of cases, you have a really good place right now to contact your existing credit card issuers. And a lot of credit card issuers are voluntarily lengthening the time that you have to make payments to them or voluntarily reducing the interest rates, in some cases, even to 0% to give you some leeway.
Do you have to call for those, Ty, or like what is the process for taking advantage of that?
You're going to call the card issuer, and as you might imagine, you're going to expect long wait times. Now, some card issuers are starting to come up with other paths other than calling in because they're so overwhelmed with incoming phone calls. So you're starting to see them be more proactive and even send emails, for example, when I got from Citi that says, hey, look, here's what we're willing to do. Here's the electronic process to go through to get this done. So you will see more development of that, and you'll see these card issuers give you a path where it can be done automated. But right now, the best thing to do is to call your card issuer, ask them to increase your limit, and then do not let them do a hard inquiry. So I recommend this no matter what economy state that we're in. You should be coming in, and every 6 months, you should just be asking for an increase of your credit card limits. But you never want to give them the permission to do a hard inquiry, because if you're going to sacrifice a hard inquiry, you're going to get a lot more credit applying for a new credit card or line than you would just asking them to raise your existing limit. But if they're not going to do a hard inquiry and they'll do a soft inquiry or look off of your actual credit history, which what that means they're not putting an inquiry on your credit report that other people can see with a soft inquiry, well, then you should always get your limits raised. So that's the first thing you should do. And second thing, just ask them what kind of disaster relief they have. Say that you own a business, you're impacted by this, and ask them if they have special interest rates that they can provide. And in a lot of cases, they are lowering it as much to 0% over a term of 6 to 18 months to try to give business owners impacted by this a greater ability to pay and lengthening the time that you have to pay them back.
So Ty, would a strategy be for people, for everybody that's listening and everybody that they're advising, to go out, get as much of an extension on your credit card as you can right now, and then and as much of a deferral or delay on payments as possible, and then use that to take you through, if you have an immediate capital need, use that to take you through, then immediately right now also apply for a disaster relief loan or some, is it a 704 Express? For the SBA?
The 7A is the best one. And 7A. If you're purchasing real estate, you're going to use a 504 loan, but the disaster relief is a 7A, just a typical working capital loan.
Does that kind of like, would that be a reasonable strategy, do you think? Let's go, like I need $100,000 to take me through this time, let's say. So I get new credit cards, or I get increases on the ones that I've got. I use those to finance what I need. Simultaneously, I'm applying for the disaster relief loans, the SBA 7A Express, get me that $350. Is that kind of a good way to like make it through this time?
It's a very good general strategy. I mean, first of all, I cannot state cannot overstate the value of inquiries in our worlds as entrepreneurs. Okay, one inquiry on your credit report can cost you $25,000 to $30,000 in funding. And so if you're going out and applying for credit cards on your own, I really caution you. There's sources out there that we work with, for example, that all they do is their whole job is to go out and secure multiple business credit cards at the same time to get somebody the maximum amount of funding. And this maximizes inquiries because you're getting all of the funding at the same time, so the inquiries aren't affecting your ability to get other kind of money. I would look into a strategy. Great. I would really recommend doing that first, because that could get you 5 to 8 times the amount of money that you're reasonably going to be able to get on your own. It gets you the longer 0% terms. It gets you business credit reporting cards, which is very important. If you're going to get credit, you need to get credit right now that reports on your business credit reports, not your consumer credit reports. If you're working with a specialized funding source that's what they do, they can guide you to those accounts and get you the accounts that help build your business credit. But most importantly, stay off your consumer credit so you can save your consumer credit quality to get things like the SBA loan. So you have to be very strategic. But I would make the first step is getting access to credit lines through a program like that. You can get 50, 100, 150,000 or more in working capital credit lines, 0% for 18 months, exactly the kind of funding you need. And you can take the cash out on those cards. I would start there. At the same time, I would be applying for the SBA disaster relief loans. Now, one step you kind of want to take before is you want to make sure your fundability is aligned. And I talk about this a lot. There's a lot of training I have online about fundability, too much to go through here. But basically, there's a whole set of requirements that lenders and credit issuers are looking at to determine if you're even worthy of being given money. And so many people get declined because, Roland, like one of the number one reasons we see people declined, surprisingly, is that the information on their application doesn't match with what's in their Secretary of State records. It's crazy. Okay. Their name's spelled a little bit differently. Their address is different. Their phone number is different. So what's happening here in most cases is these applications get denied more than half of the time because the lender thinks it's fraud because of mismatched data. So it's very important that you just come through and fine tune these kind of things. Look at your Secretary of State records. Make sure the stuff adds up. Have a business phone. Don't have a home phone or a mobile phone. Have a business address, a virtual address. Have your phone number listed with 411, any licenses you need. Make sure that when you're filling out an application, every line item on that application reflects that you're legitimate or credible to have the best chance of getting this money, then execute. And the best strategy is to go in and get all those credit lines you can get to maximize your increase through a source that specializes in that kind of funding, and then come in and get the SBA relief loans at the exact same time.
Ty, Mark Donegan said he needs capital for building a new startup, about $250,000, but he thinks SBA is for existing businesses only. And he's wondering if that's correct or not.
SBA for the most part is and somewhat not. They have something called a 7M, which is a microloan. It only goes to $30,000 though. So this works for people that are in a startup phase of a business. You can get up to $30,000 through SBA 7M program. Obviously, SBA system is going to be pretty overwhelmed. We've heard here that they put the $50 billion in, but I don't know about anybody else. I've heard nothing about them staffing up at SBA, right? So we anticipate they're going to be backlogged. But outside of that, SBA is for established businesses because they're going to ask you for 3 years worth of tax returns that you don't have as a startup. So we go back to this 3 C's formula. If you're looking for money to start a business from scratch, you don't have cash flow, which means the only other 2 C's you're going to have is good credit. So you can come in, for example, and secure $150,000 plus in the program I just mentioned. And then you really have to start looking at collateral or other signers or partners that may want to be part of it with you, using their credit to qualify, or using any of these types of collateral, such as 401k, stocks, bonds, IRAs. So for example, somebody can have money in stocks, and you're able to actually use that as collateral to get an interest rate of 5% and less on a working capital credit line. The best part is the stocks stay in place. You still earn the interest on the stocks. Nothing changes. It's just if you default, they come and they take the stocks. So that's a really good way to go, whether it be your stocks and bonds or maybe somebody else that wants to be a potential investor. It just makes it easier to tap into that kind of collateral and use that as an asset to be able to qualify for financing. So those are some of your better options to start a business if you need $250,000.
Richard Patrick is looking for $1.2 million. Is there, you had mentioned a couple of numbers early on. So the quick one, the 7A, that's the $350,000. That's a 30 to 60 day deal. That's going to take about 30 to 60 days. You mean that to get $1.2 million, where are we looking on something like that?
Well, SBA can still help you because they go up to 2 million. But the best advice I ever give entrepreneurs is that you really want to try to get money, if possible, through multiple sources and multiple programs, because it's much easier to get smaller amounts of money from multiple different lending institutions than it is to get one amount of money from one. So trying to go and get 1.2 from SBA, it can be done. You're going to be looking at about a 4 to 6 month underwriting process, a lot of documentation. You're going to have a lot of collateral to offset that risk. It's still possible, but at the same time, I would be looking at other ways to get the money that you need to piece it together. It's going to be much simpler than trying to get 1.2 from one source. And I also say, figure out what you're going to use the money for. So for example, we're really big on helping businesses build commercial credit. And what we find is when somebody says they need $250,000 and we ask what for, they're saying things like office equipment, office supplies, computers. Every one of those things you can use corporate credit for, which is so simple to get compared to these type of loans from SBA. So if you can get $50,000 at IKEA and $50,000 at Amazon and $100,000 at Walmart, all which is very practical, you can get that without guarantees, without personal credit checks. And then that limits the amount of actual physical real cash you need to get from the lending institution. And it's going to make it easier to get, especially if you then spread that out and look at multiple different programs to get the money versus just one from SBA at 1.2.
Okay. And Yassine said that she says, I assume SBA is just for American citizens. Is it just for American citizens, or if she's moving her business, which is a social media consultant from Europe to the States, doesn't have business credit or a tax return here in the US, but does have good personal credit, does she fit into categories that you think?
You absolutely can, because it still works for foreign nationals. What they just want you to have is you need to have an EIN. To have an EIN in the United States, you either have to have a TIN or you have to have a social security number. You have to basically be either a citizen or foreign national to even really get set up correctly in the United States. But once you have that, then you can get the funding here.
Yeah, and Yassine, just so you know what all those things stand for, EIN is an employer identification number, and a TIN is a taxpayer identification number. That's typically, you just file a form SS4, which is free, and you can send it in and get usually one in the same day. So assuming that she set up her company and sent in the SS4 and had that, Ty, what would the next step be for her, do you think?
Well, it depends on the kind of capital that she's looking for, right? I mean, so we've got to see. We're not going to probably be applying for an SBA loan at this point because she doesn't have anything set up beyond, the business doesn't have tax returns. It's not actually operating in the United States. So then we go back to that 3C formula. What does she have? The collateral, the cash flow, the credit. And then based on that strength you're going to find the best alternative lender that will work with foreign nationals versus a U.S. citizen.
Hi, Richard asked, do you process SBA loans as a non-bank lender or as a broker?
We do it as a broker. So as Credit Suite, we have no interest in lending our own money. We work with over 1,000 different lending sources. We deal with nearly 100 that do SBA loans. And that's essential because if you go to Bank of America versus Wells Fargo, there's certain industries they cater to. There's certain type of businesses that they'll do versus the other one won't. So we work with nearly about 100 SBA lenders because depending on the loan size, depending on the industry, depending on time in business, credit score, so many factors, you're going to find that some lenders just work way better than others. So we work and function as brokers. That way we have access to a lot of different lending sources, and we can oftentimes then lend multiple programs or multiple different types of loans or credit lines to the same borrower.
Okay, that's fantastic. And let's see, Richard also asked, do you recommend bridge loans? Whoops, it popped up. Do you recommend bridge loans to permanent loans if time is an issue? It's also important to have your books and financials. And is it also important to have your books and financial things in order? And again, it is, do you recommend bridge loans versus permanent loans if time is an issue? And is it also important to have your books and finances in order to save time?
I think bridge loans are fantastic options, alternatives to be able to get the money faster as you're waiting to be able to get the permanent funding. I think it's a great option. And when it comes to getting your books in order, fundability matters more for the books. What we see is the majority of declines that take place are because, believe it or not, your business information on Yelp doesn't match what's on your website. Those kind of basic fundamentals are the essentials that you really want to focus on. Beyond that, you've really got to look at, again, what kind of money are you applying for? If you're applying for SBA, they've got a great checklist online that tells you everything that you must do. Your business credit needs to be established. You need to check that. You need to check your consumer credit. You're going to need to have a resume. They're going to want a personal financial statement filled out. There's obviously a lot of documentation on that. You can get that from the website to get a head start on what you're going to need. If you're looking at a lot of alternative lending, it depends on the lending source. What we've seen over the last 2 years is artificial intelligence lending has become really more popular. And there's a lot of lending sources out there that are now using this where you don't need as much documentation. So it used to be you need 6 months bank statements to get a cash flow financing loan. Well, nowadays there are places like Bluevine or Fundbox, and Fundbox and Bluevine will use artificial intelligence where if you give them your login credentials to your bank, their computers will go in and do all of the underwriting themselves using the access to your electronic bank login instead of actually physically needing bank statements and manual reviews. So it really depends on the type of money you're getting in the source. You can even now get away providing very much documentation at all because they're using this kind of AI to access what's needed so you don't have to. And then in other sources, you might need 6 months worth of bank statements or might need considerably more documents as we just talked about with SBA.
Would you just very quickly, for anybody that doesn't know the difference between a bridge and a permanent loan, kind of explain what that is?
Sure. Well, there's a lot of different kind of bridge loans. So, bridge loans are just kind of what they are, what they sound like. They're there to bridge the gap in between you getting the money that you actually need. So, for example, the unsecured credit lines, we talked about for $150,000. Well, there's a great bridge loan that will give you the money you need to pay down the actual credit cards to get your utilization in line to get the loan. So it's a bridge to get you what you need, because if you come in and qualify, your utilization may be too high, you don't qualify, you can get a bridge loan and that will give you the money. It's like a short-term loan. It will give you the money you need to bridge the gap. Then you can use the money to pay down your credit cards, get your utilization in line, get the actual funding you want, and use the funding you want to pay back the bridge loan.
So Andrew said he jumped in later, SBA loans, why is that preferred versus alternative funding like factoring, cash flow lending, cabbage, and I'll throw in RBF and that sort of stuff?
It really comes down to term. And the biggest benefit of SBA loans is term. So if we talk about cabbage, for example, their going term is about 3 years. So you might be able to borrow $75,000 from cabbage on a 3-year term, and your payments might be $9,000 a month. That's very practical of where you'd end up. You could also get a $325,000 loan with SBA with only a 10-year term, and you're going to end up with a payment of about $4,000 a month. So your payment would be half as much to get $250,000 more. So the term, how long a loan is a huge factor of how low your payments are going to be. Almost all of the alternative lending that's in the space is very short-term money. It's almost all less than 5 years, and most of it, 80% plus of it, is less than 3 years. SBA loan, you're looking at 10, 20, 30 years. So you can just do the math. I mean, financing $350,000 over 3 years versus 30 years, you get an idea of the considerable difference in your payment. And the interest rates are lower with SBA as well, but I can't say enough that when it comes to keeping payments low, getting a longer loan term is the biggest factor that drives payments down, considerably more important than interest. So it's the long loan term that matters most.
Zach says, when a loan inquiry is open, where are lenders looking at information data outside of credit scores? So I guess, what are they looking at besides just straight credit scores?
Well, there's a lot of data that they're looking for. And my best advice to everybody is you really should Google LexisNexis, LEXIS, because LexisNexis is really the root of all evil, is how I consider them to be. And what happens with LexisNexis is this is a credit reporting agency. To give you an idea, my credit report's about 400 pages big. It's about this big if I pulled it out, compared to maybe 30 pages on a consumer credit report. LexisNexis has data, for example, of every home you've ever owned, the building materials of the home, the air conditioning units, your HOA information, your marriage, your kids, every school you've ever attended, every email address you've ever had, every phone number that you've ever had, and on and on and on. So what happens, every crime you've ever committed, every license you've ever had, every license suspension you've ever had, all of your public records. So what a lot of people don't know is LexisNexis is really the root of where most of these lenders are getting their information. So my very, very, very best advice is to get a copy of your LexisNexis credit report, which is 100% free. You can go to LexisNexis, you can fill out manually a form, you have to physically fill it out and send it to them. And when you do so, in about 30 days, you're going to get a copy of what looks to be a book and the most intrusive thing that you've ever seen in your life. But you need to go through this and clean this up. because everything from misdemeanors that you had back when in the day to everything in between is all coming from that data. So to just give you an example with our SBA loan, with our SBA loan, they asked if I'd ever been convicted of felony misdemeanors. I said no, didn't remember that I had. They came back and said, you actually had misdemeanors. I had to pull my own personal background check to even figure out what they were. And I can tell you they were awesome back in the day, but those were like 30 years ago, and I'm still accounting for them now. So you really need to come in and make sure that that data is cleaned up. The second thing they found was judgments that were not accurate, where they then collateralized my home as a result to get the loan. I went through steps. I proved that the judgments weren't inaccurate, and they removed the stipulation of using my home as collateral. So it just goes to show you how important that data is. So by getting LexisNexis, it's not just lenders, it's credit issuers, it's lenders, it's suppliers, it's law enforcement, it's what your insurance is based on. All these organizations are pulling this data from LexisNexis. So my advice is get your LexisNexis credit report, look through it, and anything that you find to be unfavorable, dispute it directly with LexisNexis by providing a letter and or evidence that you have to LexisNexis. So I went to LexisNexis, had some legitimate judgments on my credit report from the mortgage crisis, and when I disputed the ones that weren't legit and even told them the ones that were, they removed every judgment from my credit report. Now, why that's important is that if you dispute public records like bankruptcies or judgments to TransUnion, Equifax, or Experian directly, and they verify it, they're verifying it based on LexisNexis data. So if you ever have those kind of public records on your personal credit report, if you were to dispute them and have them removed with LexisNexis and then dispute with the Consumer Bureau, you would see that those are removed without any resistance whatsoever, because LexisNexis is the root of all evil. It's where it all lies. So get LexisNexis and clean LexisNexis up. And in doing so, you're going to find merchant accounts. You're going to find bank accounts. You're going to find the ability to access money becomes considerably easier once that data is cleaned up.
Okay, great. Ty, Richard says home equity is cheap money, but it's also risky. Can you speak to whether that's a good option compared to some of the other things that we've been talking about?
Well, look, I think home equity line of credits are a good way to go, depending on what you're using the money for. I think it's risky to use a HELOC to obviously do anything for funding for your business. But I've done that before with absolutely no regrets. So with the Fed cutting rates to 0%, it doesn't directly immediately have an impact on mortgage rates, but it will in very short period of time. So I think HELOCs are a great way to go if you're comfortable using your home as leverage. What I'm really big on is you really should focus on building a commercial credit profile, because the idea behind business credit is for your business to fund itself, for your business to build a commercial credit profile to make it easier to get the capital you need and the credit you need based on only your business credit quality without tapping into your personal assets. And I think that's a better way to go, because separating personal and business liability is very important, as we're all seeing in this outbreak, right? I mean, how many businesses ever accounted for something like this happening? They just didn't. And so when you're collateralizing all these things with personal assets or personal credit, and then something unexpected happens, you could take a huge hit and lose those personal assets or really damage your personal credit, which then really inhibits your ability to recover from the actual disaster itself. So just be careful and have those cautions.
And referring to business credit, is that aggregate of Dun Lexis?
Well, it's somewhat. So when we look at Dun & Bradstreet, Equifax, and Experian, Experian have commercial divisions. Dun & Bradstreet's the biggest business credit reporting agency. So they are business credit reporting agencies. They're also what we call vendors as well in a larger system called the Small Business Financial Exchange. So a lot of people don't realize this, but when you fill out an application with Wells Fargo is member of what's called the Small Business Financial Exchange, the SBFE. Well, so is Bank of America. Almost all banks are. And this is an open sharing platform where they openly share all of your information. So for example, Bank of America knows everything you put on your application at Wells Fargo. They also know how you performed on your Wells Fargo loan, your payments, everything, because they openly share data. To be a member, you have to openly share data. So something you should know that this is happening, but then Dun & Bradstreet, Equifax, Experian, and LexisNexis are vendors of that data. So then they will actually take some of the data from the SBFE, and you'll see that on their actual reports. But that's the only link they have, as being vendors in SBFE. Outside of that, that's where, I guess the easiest way to say is where D&B, Equifax, and Experian are getting some of their data indirectly from LexisNexis as part of the SBFE, and all being vendors of them.
Okay, fantastic. Chad says, what are the early steps to build business credit? Currently, he's a sole proprietorship, incorporating soon, been in business 4 years. What would you say are the steps he should take, and anybody else that's kind of in that new position? Oh, 4 years.
It sounds like you're incorporating already, so I don't need to talk to you about that. Sole props, 1 in 7% chance of getting audited. Corporations, 1 in 50, just to give you an idea of where you stand. Sole proprietors, you are the business, so you can't separate personal and business liability, because if you get sued, I'm not an attorney and this isn't legal advice, but if the business gets sued, you're getting sued because you are the business. So one of the first steps is you've got to make sure that you're separating and have a real entity that can be separate from you, such as an LLC or a corporation. You could even choose an LLC for that matter. Then you need to go through and address your fundability. We talked earlier about fundability. I won't jump through that. There's about 125 fundability factors: the name, address, phone number. Set up your business where it's legitimate and credible. From that point, the next step is to get accounts that report to the business credit reporting agencies. And there's 2 primary ways to do that. You can do one of the programs we talked about today, which is, get $150,000 in 0% interest credit lines that report to the business credit reporting agencies. That will give you initial trade lines on your business credit report. And when you have those trade lines, that will establish a credit score with you from the credit bureaus. And what I always say is it takes 3 things. You need trade lines, accounts that report to them. That will give you a credit report, and then you have a credit score. Those 3 things, trade lines that give you credit report and score, is how you establish an initial credit report. The second option is regardless of personal credit, which is using vendor accounts. So you can get credit with vendors that report to the business credit reporting agencies. Some of them are Granger, Uline, Quill. These companies sell products and services that we all need, but the difference is they'll give you credit even if you have none, and they report that credit to the business credit reporting agencies. So you can use vendors to build credit that will give you credit, that will report it, and you can do that without a personal guarantee and credit check, or you can come in and get credit lines that report to the business credit reporting agencies. Either way, you want to get about 5 of those kind of accounts reporting to establish an initial report. Then you can start moving on to store credit, Home Depot, Lowe's, Amazon, Walmart, etc., with high limits without the guarantee and credit check once you have those 5.
That's great. Thank you. So let's say that you are in trouble right now because your clients have kind of frozen up and people are asking for refunds, or your business is dried up temporarily just because of people that are freaking out. What would you do if you're in that position and you need money fast to pay employees, cover the bills, maybe get some money for yourself, Ty? And let's say that you don't have any credit lines currently. What would you recommend people do?
Well, it's hard to answer that question without marketing, right? Because everything that I've learned from digital marketer and from your team, comes down to sending emails, down to doing more with our database to be able to get the money that we need. But when it comes to actual funding, then what you really have to do is, again, look at that strength. If you're already in trouble, you need to really focus on your credit or that of a guarantor to come in and open up credit and make it available through credit lines. That would be the very first step that I would take. If I have collateral, if I have credit, I'm going to tap into it. If I don't, I'm going to go to people in my circle. And if it's me, then I'm going to even consider things like giving them back a high interest rate of return, or I'm going to give them some kind of maybe ownership interest in the business, even a small amount of equity to try my save my butt. Keep in mind, Roland, you're proposing something that's saving my butt here. So I'm going to look at all those alternatives to use my credit or the credit of a guarantor, my assets or the assets of a guarantor to open up that capital, because my cash flow is already diminished. So using that as an asset really isn't going to work because it's now too late. That's going to buy me time while I'm coming in and applying at a state level and a federal level to get the SBA assistance that I would need. That would be my action plan. But again, before all that, I would really tap into my existing database that I have and try to extract money there as another way of giving myself the funds that I need to pull through.
You mentioned a guarantor. Is there a way to find those? How would you approach that? You mentioned your network, so we'll start there. But let's say that you don't have anybody in your network is there a place that you can find folks that will do that for
Not a
fee?
legitimate one. I mean, there's a
Okay.
lot of places out there that will try to charge you for access to a guarantor, but personally, I've seen them do nothing but rip people off and people
Okay.
lose money. So I've never found an actual legitimate source you can go to get guarantors. But when we look at angel investing, we see that the majority of angel investing happens through what's called affiliated angel investing versus unaffiliated, which means a lot of people hear about angel investing, but what we don't realize is in a lot of cases, 80% plus of it comes from people in your own network. It's not even coming from investors that you don't know. So you really have to expand your reach there. You've got to look at everybody in your circle, and then you have to start asking them who else might be in their circle. There's a lot of people right now, and peer-to-peer lending has opened up. And if you're not familiar with peer-to-peer lending is really the first shot of people investing into private companies like we do public companies. So you're able to put in money, the money is pulled together, and it's linked to businesses. So it's actually, and then you get a rate of return. So it's kind of like a nice way for you to invest into privately owned companies versus publicly owned. There's a lot of people out there with a lot of access to money that would love to do that would love to lend money at 8, 9, 10, 11, 12% interest to you, give you a reasonable term, and get you the capital that you need. So it's just a matter of talking to the people that are in your network or people they may know that may either have an interest in having ownership interest, even if it's a minor stake in a business, or also getting a rate of return, a good rate of return on money. Then there's a lot of investors out there that would definitely do that. And if you tap into your affiliated angel investing network, then there's a good possibility you're able to tap into the capital you need.
I love it. Okay, so two more things. I'll hit them both at the same time. These will be the last two we've got time for. Andrew said, using signed contracts of clients to exemplify current and future cash flow. Annual contracts we have with our clients, for example, SBA, Angel, local bank credit unions. I believe what he's asking is, can he use signed client contracts that are committing to do something like to pay money to the company?
Yeah, there's definitely specialized funding where you can use that to get financing. Much easier, of course, if those people have already paid historically or are currently paying on that. But yes, you can definitely do that.
Okay. And then Zach said that he recalls you said this earlier in the session, but what loan type could he use in the acquisition of a small business?
Acquisition of a small business, typically you're going to use an SBA loan. And the way an SBA loan is going to work is they're going to want you to put about 10 to 20% of your own funds in. And I've given you many alternative ways you can help get the 10, 20% that you need to put in. And then they're going to look at the assets of the business that can actually be used as collateral to be able to buy it. So for example, if a company is somebody coming in and buying our company, a Credit Suite, well, we've got 7 figures plus in AR. The 7 figures plus in account receivables would be used as the collateral. Somebody can come in for the purchase of 10, 20% down. You come and even to get the 10, 20% down from other private investors or from other lending sources. And then SBA would cover 80 to 90% of the rest of the purchase amount. So SBA is the number one type of financing that's used for the acquisition of companies.
Okay, cool. That's really great. So thank you, Ty, and everybody for coming on. Would you, Ty, tell people, number one, if they go through you, do they pay you a fee? Does the SBA pay your fee? How does that work?
So we've got two different programs. When it comes to getting you loans and credit lines, we never charge a fee. We don't roll in a fee on the back end. We don't charge a fee on the front end. Some lenders in a lot of cases will then pay us a referral fee. And it doesn't cost you anything because we do so much volume through these lenders that we're getting discounted rates that we pass on. So it's going to be much cheaper for you to go through us to get the money. And we still get the referral fee that way without charging you anything. That's being said, the money's not free, obviously, right? Lenders are going to charge interest rates. They're going to charge points and fees, although we negotiate that down and use our volume discount to get that for you. And on the other side, we have a product that we can actually use to help you build your fundability and build your business credit as well. That we do charge for, and that starts at $3,000. And we break that down into payments to make it affordable. So whether or not you're looking to improve fundability, build business credit, we've got that. And we've got a lot of different ways we can just help you access the money you need without charging you any money to do so. And a whole finance officer team that walks you through that whole process, even gets you the money you can get now and helps you qualify or build what we call a business finance blueprint to get to a point where you can qualify for more money in the future like SBA.
Okay. And how do people get a hold of you?
Our main website is creditsuite.com. We've got a great guide downloaded over 1 million times now at creditsuite.com/EIN that maps out the exact steps to build business credit. And they can also give us a phone number or give us a call. And our phone number is right on our website, but that phone number is 877-600-2487, 877-600-2487. Just please be patient. As you can imagine, we're pretty overwhelmed right now, even overstaffing. So if somebody doesn't answer right away, leave a voicemail. We'll call you right back. Or you can send us an email, info@creditsuite.com. And again, all that information is available on our main website, creditsuite.com. That's creditsuite.com.
You did awesome at getting that all out. Thank you, everybody, for listening. We really want to help as many of you as possible that are going through tough times right now or just need capital generally. But with all the craziness in the world, Ty, thank you for helping make it a little bit clearer.
Thanks for having me on, Roland. I appreciate it.
Okay, thanks.